Hello, and welcome to the latest installment of What's New in Economic News. The big thing, the S&P 500 hit an all-time high. The S&P 500 topped 4,800, which is historically the highest that it has ever been. The S&P also rose 23% last year, and so this all-time high that we've just hit, which happened yesterday and today, this all-time high of the S&P 500 is just a continuing of the tremendous growth that it's had in the past year. Now, in addition to that, the U.S. Consumer Sentiment Index is at its highest point since July of 2021. So the Consumer Sentiment Index is, as the name implies, a survey of how optimistic people feel about the economy right now. And people feel that inflation is more or less under control, that this is consumer sentiment as measured by the index. People feel that inflation is more or less under control. People are generally not worried about a recession. And so people are, having, again, reporting the highest level of consumer confidence in nearly 3 years, since July of 2021. So that, coupled with the S&P 500 hitting a high, are a couple of quantitative factors that have come out this week that show why a lot of investors are bullish. But there's more. There's more behind the scenes, because the World Economic Forum in Davos was, recently took place. And at the World Economic Forum, the CEO of Blackstone, Steve Schwartzman, told Bloomberg that he sees a lot of animal spirits playing out. Now, animal spirits is a reference to emotion hijacking the market. Bulls and bears, right? Animal spirits is a reference to people getting really emotional about their investing decisions. And everyone, because we are all human, everyone, even professional investors, are subject to this. There is certainly some very high-ranking investors, such as Steve Schwartzman, believe that because of the widely held expectation that the Fed is going to be reducing interest rates this year, which has pretty much already been priced into the market, and because of expectations that will free up capital, when the cost of capital becomes cheaper, more companies will be able to use that capital to invest and grow. Home buying, which has reached a record low, home buying is at its lowest point since 1996, will start to pick up. And so there's a lot of speculation that as the Fed lowers interest rates, the markets will do well. Now, is that going to come to fruition? Of course, only time is going to tell. We don't even know when the Fed will lower interest rates. The big debate people are having right now is, will it be Q1? Will it be Q2? How many reductions will they have? To what extent? We don't know any of those factors, but we do know that enthusiasm around Fed rate cuts is leading to or could be a contributing factor that's fueling some animal spirits in the investor world. This is, of course, also an election year, which just kind of riles people up more. Historically, we tend to get more froth in the market, more animal spirits, more emotional reactivity during election years. And this one promises to be likely to have higher ad spend than previous ones. Typically ad spend always increases during election years, but this one looks like it will be a particularly big one. Now, what's interesting about all of the good news that we're seeing in the United States is that this stands in contrast with some other parts of the globe, including China. So, by contrast, Chinese stocks are absolutely battered. There's a huge sell-off. Chinese stocks have lost 6.3 trillion since their peak in 2021. And the sell-off that they're having at this moment is just a continuation of the beat up nature of stocks in the Chinese market last year in 2023. Moving back to the United States, though, the NASDAQ has reported that around 85 companies have filed to go public, which is more than usual. So we're seeing more private companies filing for an initial public offering. We're seeing more of that in 2024 than we tend to see in other years. One of those companies is actually a Chinese company. It's Shein, the major clothing retailer. Shein is set to IPO in the US this year, and it is looking at a $90 billion valuation in its IPO. Now, in addition to Shein and also the 85 companies that have filed for public offerings with the NASDAQ, we also have 10 new spot Bitcoin ETFs that have been approved by the SEC and are now trading. So, in addition to there being more capital, or the expectation that there will be more capital in the markets, we are also seeing more companies get listed on the markets, companies that people can invest in, companies and ETFs, actually, companies and other forms of assets like cryptocurrency. Don't forget also, we're going to have, or likely we are going to have a Bitcoin halving event this spring. So a halving event takes place periodically, and it happens when the supply of new Bitcoin entering the market gets cut in half. So the supply of new Bitcoin that enters the market is that new Bitcoin comes to the market in order to reward miners. It's so the reward that miners receive for mining is the new Bitcoin that is created. And periodically, Bitcoin modulates its own supply by cutting that reward in half. And the next halving event is expected to take place this year, likely in the spring. And, so that combined with the 10 new spot Bitcoin ETFs that the SEC has just approved and that are now trading, means that in addition to this being a big year for IPOs and a big year for the U.S. S&P 500 bull run, it's also likely set to be a big year for cryptocurrency. So, stepping away from the markets and looking at what else is going on, there's a new study that came out. This study was done by the Federal Reserve Bank of San Francisco, and the San Fran Fed found that there is no correlation between remote work and productivity. So, the San Francisco Fed surveyed 43 industries ranging from chemical manufacturing to food service, so a wide range of industries. Across these 43 industries, they found that about 30% of time spent at work is done remotely. So 30% of paid work days are done remotely. And they found no statistical relationship between the level of productivity that took place and whether whether or not the work was done remotely. So that is neutral news. It's neither bad nor good. It simply states that there's really no difference. It's neither better nor worse. So those are the findings of the latest study from the San Francisco Federal Reserve Bank. So that's what's new in economic news this week. Thought I would come and fill your Friday with the latest in economic news. Thank you so much for watching. That went by fast. We didn't talk about mortgage rates. Oh my goodness. Okay, mortgage rates are now currently in January 2024. Mortgage rates are now at their lowest point since May of last year. So mortgage rates are now currently at their lowest point. That's the good news. The bad news is the sale of existing homes in December dropped to its lowest point. So we're basically, home buyers have stepped out of the market because interest rates are high. Historically, interest rates are actually normal, but compared to what everybody is used to from the last decade, interest rates feel high. And so home buying has hit an all-time low, as evidenced by the sale of existing homes in December. Now, that's not new construction, but the sale of existing homes in December reached a bottom point. Meanwhile, the cost of mortgages are starting to come down. So mortgage interest rates are currently at their lowest point since last May. They are widely expected to continue to come down. So for any of you out there, if you're thinking about buying a home, remember, if you're waiting, then you are waiting alongside a large pool of people who are also waiting. And when you come into the market, when interest rates drop enough that you decide you no longer want to wait, likely those other people who are also waiting are going to have the same idea and they will be your competition. So it's likely that home prices will rise when home buying rises, right? When demand rises, because supply is fixed. Oh, it's not fixed, but supply has a long lag time. When demand rises and supply cannot immediately move to meet that new demand, prices go up. And so likely that's what many analysts expect to happen in the housing market in the coming years. So that's the latest on the housing and home buying front. So that is the update of economic news. Generally, people are really bullish, and the S&P hitting a record high is probably the biggest story of the past week. So, share how you're feeling. Let us know in the comments. Are you bullish about this year? Are you pouring more money into the S&P? Are you interested in buying a home? Are you, where are you in terms of your consumer sentiment? Are you still worried about inflation? Share in the comments. Thank you so much for watching. Thank you for being a part of this. And I will see you in the next Friday economic update.